Eric Muathe, Muathe.com. It is February 15th, 2017. Let's take a look at the chart for AIG, which is down about, let's call it about 9% for the day. This is the daily chart. We can see that it is moving below both the 50 RSI level on the daily and also moving below 30.9. So no surprise about the big move because of moving below these two threshold numbers on the daily. But that's not the point for this video. Let's take a look at the weekly. The weekly, we can see another reason why it is down, relatively huge based on the previous direction and trend. You can see it took a couple of months to move from about 60 to the highs of 67. It's taken one day, if not 1 week, to move from 67 back to about the 60 level. Now remember, stocks have a tendency of using the staircase on the way up, and they tend to use a slide on the way down. Here we can see that it is moving below RSI 50 for the week. Hence we are seeing a huge reaction lower. Again, that's not the purpose of this video. What I want to show you is, if you take a look at a long-term monthly chart for AIG, I'll draw one simple line. And I have to say, even with the Dow, the Nasdaq, and the S&P 500 trading at all-time highs, as you can see, Dow, Nasdaq, S&P trading at all-time highs, there's a lot of stocks that don't have the correct long-term fill. And what I mean by that is there's a lot of stocks that are showing major sell signals, which begs one to wonder why, if the market is so strong, some sectors of the market don't look as great. But anyway, back to AIG. Take a look at this line here. Now this line was a previous support line in the 90s. Once we broke below that line here in 2001, AIG went down. And that was in large step with the 2000 to 2003 bear market. Now if we take the same line and extend it, let's just do that. We can see that it became resistance with uniform activity during this double top rejection phase for the highs here. And again, we went into another drop zone for AIG. We come back and try and move above the line, but we were rejected twice. Once in late 06 and then again in the middle of 2007. Turned out to be a major high. As you can see here, stock was trading in a back split price of about, let's call it 1100. And it went all the way to almost zero. Now that coincides with the 2008 to 2009 bear market period, this drop here. What I'm getting at clearly is, right now if we extend the same line, we can see that the stock was rejected here with uniform activity for the highs. You can see them, but the highs of 2015. And of course we can see here that it's being rejected as we begin 2017. So given that major resistance, chances are, even with today's drop, the next major direction is down for AIG based on long-term monthly uniform activity backtest failure. Otherwise, if the stock is to change its trend and move higher, it would need first and foremost to clear and trade above this line. But as long as we have that sell signal, as long as the market has confirmed resistance here, chances are the recent highs are gonna stay highs over the next couple of months, maybe even over the next couple of years. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Woo!